Hey guys, welcome back to Father and Son Investing. We're going to conclude our series on artificial intelligence investing today by talking about VGT, Vanguard Information Technology ETF. Now, some people will be thinking this is not an AI ETF, this is a technology ETF. You would be right if you're looking for a pure play, but as we've seen, many of these ETFs are not pure plays in artificial intelligence. However, this one invests significantly in companies that use artificial intelligence or are making artificial intelligence products. In fact, this list from the ETFdatabase.com talks about how they go about including companies on their list, and if we look, we'll see that VGT is right here. Now we're going to take just a moment to talk about Vanguard. I really like Vanguard. I use them for my Roth IRA, and I also use them for my investment account. They were founded in 1975 by Jack Bogle. Now, Jack Bogle was a graduate of Princeton University in economics. He cut his teeth in investing at Wellington Management, rose through the company, and became the executive vice president. However, in 1973 and 74, during a bear market, there was some friction among the partners there at Wellington Management, and he was fired. In 1975, he opened up Vanguard Group under the premise that it would operate at cost and independently with their own directors, officers, and staff. Now, in 1976, he brought index investing to the individual investor by creating the first index investment trust. That went on to become the Vanguard 500 Index Fund, which has grown to be one of the largest in the industry. At that time, people called it un-American and a sure path to mediocrity. In 1977, Vanguard converted from a broker-dealer distribution model to a no-load system. He essentially created a client-owned company. In fact, he called it the only mutual fund company. And one of the premises is incredibly low expenses for investors. So let's just jump right to the expense ratio for this ETF, 0.1%. 0.1%. The closest expense ratio in the series that we've done so far has been 0.45% in IRBO. We've seen expense ratio up to 0.95% in ROBO. Now you may be thinking, big deal, what's the difference between these expenses? Well, Vanguard lists the average expense ratio for a fund like this at 1.03%. Over 10 years, you would spend $2,328 of your own investment money on expenses. In a fund like this elsewhere, at Vanguard, you're going to spend $236. So you can see that this adds up over time. Now, what are you going to get if you invest in VGT? Well, quite honestly, you're going to get a lot of Apple and Microsoft. In fact, Apple and Microsoft make up almost 40% of the holdings within this company. Now, beyond that, you're going to get a whole bunch of other companies in much smaller percents. In fact, there are about 350 equities within this ETF. NVIDIA would be the next largest one at 4.4%. The top 10 are going to make up almost 60%. Of course, 40% of that is going to be Apple and Microsoft. Now, while this fund obviously is a tech-specific ETF, it is well diversified within the tech arena. The largest percentage will be in system software. We can see, though, that they have a healthy representation from semiconductors and application software, as well as technology hardware. Now let's just take a look at performance. That's something that we certainly should be worried about beyond the expense ratio. This is the theoretical growth of $10,000 since 2018 of the ETFs that I've been reviewing in this series. ARKQ certainly leads the way. Again, they were running pretty much with the pack until about September of last year when they really took off. Since then, they are regressing a bit towards the mean. But the next one in there is VGT. Your $10,000 would be worth about $24,000 now. Now, how does VGT compare to the S&P 500 and the total stock market ETF? Vanguard has each of those, and if we compare, we'll see that VGT is just killing it compared to the other two, which also are doing quite well. What does the future hold for VGT? Well, Gartner, which is a global research and advisory company, is projecting that worldwide spending on public cloud services will grow at 23.1% this year and will continue to grow at a compound annual growth rate of about 16% between 2020 and 2025. Worldwide IT spending is expected to exceed $4 trillion this year and is expected to grow at another 5.4% in 2022. Additionally, I think we need to look at the past a little bit to predict the future. Think about 20 years ago, all of the technology that we didn't have and how crucial that is to our life today. I think that we can probably expect to see similar development in new technology that doesn't even exist today, but will have incredible spending on it 20 years from now. So I expect VGT to continue to grow. If there's one negative here, I think it's the current price. If you are already a shareholder of this ETF, you may be wondering why I would say that. I definitely love the appreciation in the price of this ETF over the years that I have owned it. However, if you are a new investor, paying $419 for one share could be difficult. One other negative that I see with VGT is that you're essentially investing in only U.S. equities with this fund. It's 99% U.S. equities. Compare that to others in our list where some of them are close to 50-50 and some of them are 3-1. So that is one negative here, is the non-exposure to non-U.S. equities, especially when it comes to AI, where so much of this is occurring in other parts of the world. The only other negative I can think of for this fund we already discussed, and that is the fact that almost 40% of it is Apple and Microsoft, which at the moment is great, but should those companies fall on hard times, this VGT ETF will also fall on hard times. Now let's just wrap up our discussion on artificial intelligence ETF investing. What have I learned from this? Well, one thing that I've learned is that there are a lot of artificial intelligence ETFs out there. This list from ETF.com has about 28 ETFs. This list from ETFdatabase.com has 46 artificial intelligence ETFs. This is an ever-expanding list. In fact, just this week, Goldman Sachs launched their Future Tech Leaders Equity ETF. Again, this is not a pure AI play, but they invest in plenty of companies that are associated with AI, such as Marvell for hardware, such as Atlassian, and Workday. What else have I learned during this series? The use of artificial intelligence is just going to continue to grow. In fact, just this morning I was watching a video talking about companies in China using artificial intelligence during their hiring process. A candidate is actually interviewed by an artificial intelligence bot, which uses the candidate's facial expressions and word intonation to decide whether they should proceed forward within the interview process. And just yesterday, I saw an article on CNBC talking about artificial intelligence taking over real estate. This article goes on to describe a company that is using artificial intelligence to get people home loans. Artificial intelligence really may be the fourth wave in the Industrial Revolution. I plan to continue to invest in it, not solely, obviously, but I really enjoy learning about these companies, and I hope this was enjoyable for you as well. If it was, please give us a thumbs up. And as always, share this information with a young person in your life. Until next time, enjoy your investing.